Peter Eliades with you again, showing off this fabulous price projection software. This is Monday, October 28th. We've been doing daily updates. For those of you that are new to the site, tune into us every day. Go and subscribe. Press the notification button. You'll see the everyday updates, but you'll also be notified if there are any intraday updates of any kind. So we're going to start right out with this fabulous projection software and just give you an idea of what's happened over the past week or two. On this particular day, as you can see, on October 11th, we broke above both these offset lines, and that generated an upside projection on the S&P cash between 30.3645 rounded off and 30.7977. So we've slowly made our way up there, and today we got right inside the projection window. So that can mean one of a couple of things. First of all, the first thing you want to do when you get inside a projection window is to check longer and shorter projections and see if there are any higher upside projections. As you can see from this update here, or from this projection, that the window, you could get all the way up to around 3,080 and still be within the projection window. So all this is telling us today is that for the first time since the projection was given on October 11th, we have entered the projection window. Another successful projection for the cycle projection software. And it took us all of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, just over 2 weeks. And here we are within the projection window. So now the question becomes, is this it? Do we turn around from here? Is this an important top, a short-term top, intermediate-term top? Well, let's take a look for some clues at the next longer projections. This is a nominal 5-week projection that we're looking at now. And on this projection, as we'll show you in a second, if we move the chart over, okay, we indeed do have higher projections. And they were given, it looks like around the same time. 1, 2, 3, 4, 5, 6, 7, 8, 9, about 9 days ago, just under 2 weeks ago, we got a nominal, remember this is a 2.5 week offset, the equivalent of that. And so we got a nominal 5-week projection, and that one calls for 30.8674 to as high as 30.9607. Does that have to be met immediately? No, it doesn't. And now you get into the tricky area with projections. Because we have met a smaller projection, there's nothing that says we can't start some kind of journey down to the downside here and then go back up to this upside projection. But as long as we have higher projections intact that have not been invalidated, then we have to respect those projections. So I see no reason here for getting bearish, at least not yet. Should we start to come below these projection lines, and we have the advantage now of the projection lines, or the offset lines, I should say, moving up underneath us. So that's just something we'll be watching. But in the meantime, we are looking for the fulfillment of this 30.8674 to 30.9607 projection. Those are the only two things we're going to go over today. In the next few days, we'll go over projections for some of the other indexes, averages, the Dow, the New York Composite, which is probably my favorite projection generator. There's one more chart I'd like to show you today, though, and that is this. It's not a timing chart by any means, but it is a valuation chart. Now, let me make it very clear that although I pay attention to valuations, you do not look at valuations for market timing, because you can wait a long, long time in overvalued territory. Let me give you an example. Here's 1995, right around here. If you had waited in 1995 and watched this go up to the level that looked like it was overvalued in 1970, 71, 72, this is the all-time high Dow, January of 73, occurred in this level. That looked overvalued. So at this point in 1995, you can say, whoa, we're overvalued. Let's get out of the market. This was around 96, coming into 97. And you would have waited a long, long time and gone up to this level at 137%. Now, this is very simple, this formula. The numerator is the Wilshire 5000 stock index. For those of you that aren't acquainted with it, it includes every actively traded stock in the United States of America. So it's an all-inclusive index. The denominator is the nominal quarterly GDP for our country. So you divide the Wilshire, the valuation of all stocks commonly traded, by the nominal quarterly GDP, and you come up with this particular chart. Obviously, if you get over 100%, you tend to be overvalued. In 2007, before a 53% decline, it only got up to 105. But look where we've gotten in the last few quarters. This is the last quarter of, either the last quarter of 2018, or the first quarter of 2019. But anyway, that set a record right around above the 140% level. We came down a little bit with a decline that we saw into December, and then have come back again. I assume that this is the mark for June, but it may be the March mark right here. In any event, as you can see, we are extremely, historically overvalued. Doesn't mean you're going to top here based on this, so don't make that mistake. As we said, you could have made that mistake in the mid-1990s. But what it does tell you is that on a long-term basis, you are historically overvalued in the stock market. And that's where our projection technique comes in, because just the fact that you're overvalued does not suggest that you're at a market top and should sell everything. So, relatively short update today. Wanted to show you this valuation chart. Keep in touch with us. Subscribe. Leave some commentary if you wish. Give us a thumbs up if you wish. Please do. Thumbs down if you explain to us why. Thanks a lot for watching. We'll talk to you tomorrow.